And that leads to another issue, big issue basically of the regulator, the over-reporting. Because the law says if you have a suspicion that there is money laundering, you should report it. So in most of the cases now, the investment firms, even if they have 0.1% suspicion, they report immediately. I would say something different. Why we don't move this responsibility of creating a software to the government? So to put all the resources in a central software, which will not give even space to the brokerages to escape from this monitoring of money laundering.
Here we are. Here's another podcast, The Financial Frontiers. I have a guest today, a good friend, a really good friend, and associate and ex-colleague, lawyer. I think let me not mess up your introduction, Joseph. You are the best person to introduce yourself. So thank you for joining the podcast. Thank you for your time. Let's go. Who are you?
Hi, Dinos. Thanks for having me, first of all. And hello to your audience. And I wish you good luck in this new podcast. My name is Joseph Tsirakkis. I'm working in the financial industry the last 12 years. I started the career, I'm a lawyer by profession, so I started in a law firm in 2011, and then I moved quickly to the financial sector because back then it was in Cyprus, there was a huge trend on the compliance sector. So after finishing my studies in Greece, I moved to the UK for my master's degree, then back to Cyprus, litigation and corporate law for a couple of years, and then moved to the financial industry. Since then, in 2012, I started in JFD Brokers, a Cyprus regulated firm, and I'm involved in JFD from 2012 until today, with a small break around 2015-16, where I moved to London to set up another business with an advisory firm in Cyprus.
Yeah, I remember we were colleagues, right? So you joined in 2012 in JFD Brokers.
Yes.
And then I came in 2014.
Yeah.
And that was my first kind of introduction into the into this sector in our business, in our industry. That was my first introduction. That was actually where we met. And those were good times. We had some challenges, I'd say.
Yeah. I remember a very tall guy entering the office with a suit, and you can see also the shift even on the clothing now. Nobody's wearing suits in this company.
Back then, yes, we had to be prim and proper. Now
yes.
Now we just we dress as we want. It's all casual. Yeah. It's all good. Good. So, yeah, tell us a little bit about the journey, right? So, you mentioned legal and litigation before JFD. So that was, I guess, kind of, let's say, general law practice. I don't know. Is there specific? Like, is there a specific type of lawyer that you are? Actually, I had this conversation with my wife before. She was. Really, I did. I had this conversation before. I thought, she goes, "What exactly is Joseph specialized? What type of lawyer?" And I didn't know the answer, to be honest. I told him he's good with financial firms. That's all.
Look, basically, there is no. When we started in the law firm, it was generic litigation, mostly banking and commercial law. But there is indeed financial services law. And this was my specialization on the master's degree. But just for you to understand, in 2012, when I was becoming head of legal and compliance in JFD, back then, there was I was introduced for the position of compliance officer. And I was thinking, what is this exactly? I mean, I have never heard it during the university time or during the 2 years at the law firm. So I was thinking, what is this? And I actually learned the whole thing while I was practicing it once I have entered JFD. So now these days there are much more guidelines on the financial services law. There is background. There are specific courses that you can follow. So it's totally different 10, 11 years later.
And I think, I don't know if there's actually, the theory that's built in it that, for upcoming lawyers or, people who want to follow the profession specifically in our sector. I don't know if the theory is there. I think putting practical, hands-on, experience that trumps everything, right? So I think that's a good cue into. Let's discuss a little bit about how the compliance has evolved. How has things changed? Because back then, from my limited view, not deep in, with discussions with the regulator, the CySEC, and whoever you work with. How have things evolved? The bonuses, no more. Leverage has changed quite a bit amount. Tell us a bit about that. The experience over there, how the regulator has evolved, how you have also have evolved, and always to the protection of the end trader, right? At the end of the day.
Basically, I think that. Although a lot of people have different opinion on that, I think that CySEC did a very good job throughout the years. It was a very complicated and risky industry, especially 10, 15 years ago, with all these things you mentioned, bonuses, high leverages, low margins, binary options. And indeed, I think for Cyprus it was a very good opportunity to rise in this industry and get some good traction from companies around the world. But indeed, the regulation back then was very soft. So the big change came in 2017 with the changes, with the move basically from MiFID 1 to MiFID 2. Then a lot of things changed and became stricter. But we cannot accuse CySEC that they did not do a good job. It was just softer before. And they attracted a lot of business, and it gave also the possibility to a lot of lawyers to move to this industry, which we didn't know before. And indeed, I mean, to become a compliance officer, you didn't need to be a lawyer in the past, which I was always thinking that it's not very right, but especially back then. But now, after 10 years, I think there are great compliance officers which are not lawyers, but there are also great lawyers that are compliance officers now. So at the beginning, I remember, a lot of people were accusing us, you are a lawyer, you finished good universities, good degrees, blah, blah, and you're entering a very risky industry, which we don't know if after 2-3 years will exist. It seems that not only it exists, but it's growing. And it's growing not only in the sector of investment firms, but you can see also the crypto exchanges coming in the industry now, in addition to the rest. I mean, the usage, the funds, and all these heavily regulated industries.
Yeah, interesting. So let's talk a bit about, because a lot of the audience won't know a lot of the stuff that we're talking about here. So, for example, MiFID 1, MiFID 2, I know EMIR, is out there. What is all that? Well, I know it's reporting, but I think let's kind of break it down to how you'd explain it to somebody who's never, ever heard it ever in their life before. They don't have a clue what we're talking about. What is that for? What is that? And what's the process? And why is it in place? Right. So
yes. There is one main target from the regulator: to protect the end client, the retail client. Since the people can trade online and not as before through your certified broker. Since the people got that access, the regulator had to come in front and protect these people. Especially if we discuss trading, which involves also bonuses, if you complete some requirements, and higher leverage and all these technicalities, the regulator realized that it became a very risky market. Throughout the years, they had to take extra steps to protect all these innocent people in a way that they didn't understand before the risks involved in this industry. For that reason, they started drafting different regulations, which some of them are daily reportings, as you mentioned. So basically, the broker every day is disclosing to the authorities, yesterday I had this number of clients, they did this number of trades on these financial instruments, so a full report so the regulator can have a clear picture of what is happening in the brokerage. And at the same time, the regulator is imposing on the financial firms to make a lot of other reports which are related to anti-money laundering, they are related to compliance report, to risk management, to financial statements, and all these different kind of reports that exist today. So the main purpose was to protect the client and the client funds. So the whole move of the industry happened for these two main reasons, basically. And this is not happening everywhere. These are most of these rules are in Europe and in the very advanced countries in terms of regulation. I mean, you can still see the previous practices that we used to have in Cyprus in a lot of other jurisdictions, like in Asia, in Latin America, etc.
So these reporting. So I believe MiFIR, EMIR. These obviously, as you touched on, applies only to Europe, right? And when it comes to the regulation, does a broker that's registered, say, for example, under the CySEC, versus a broker that's registered in another jurisdiction, do they have to apply to the same reporting, and then and can they onboard the same customers? And what insight can we give an end trader when it comes to what they should look out for from a broker, and what do they have access to in terms of looking out? Obviously, an end trader is not going to be able to know what reports have been, I don't think these are even available publicly, but what can an end trader look at in terms of, the regulation and if, a brokerage firm is compliant? And so I touched on a few different points there. So my first question was actually, let's fix that one first. Is the reporting the same? So, for example, what are the different jurisdictions? Let's go with that. So let's say we know of the CySEC, we know of the UK. What different jurisdictions are there, and are the reports the same?
Yes, they're not the same. I will not say that EU reporting is stricter than UK reporting, for example. They're quite similar, actually. But we can say that EU, Australia, UK, Singapore, Japan, USA, Canada, they have quite strict regulations. Mm-hmm. There is a lot of other licenses, for example, in offshore jurisdictions like Mauritius, Seychelles, Vanuatu, Belize, etc., that they also have regulations, but the reporting is much less. Okay, so the basic rule is that a European client should be onboarded on a European entity in order to be protected by these regulations. Now, there is a lot of European clients who are asking from the broker if they have an offshore license to get onboarded on the offshore license in order to enjoy higher leverage and bonuses. This is the broker itself cannot solicit the client to onboard him on the offshore entity. Obviously, there is benefit for the broker to onboard the clients on the offshore entities because the risk is higher, hence the income of the broker could be higher. But this is prohibited. The solicitation on offshore brokers is prohibited. This is the first part of the reporting. So there is reporting everywhere, but there are different categories of reporting. The EU is, I would say, one of the strictest.
Yeah, and then when it comes to how it benefits the broker, I understand that, and you can correct me if I'm wrong. It's a client who's in Europe who's limited to a few things, so the leverage is 1 to 30, and no bonuses are allowed. If, at the discretion, obviously, of the trader, if they want to be onboarded and they understand the risks, I think it's important that a trader understands the risks and the difference, between what it means to have a leverage of 1 to 30 and what it means to have a leverage of 1 to 500, for example. And where it benefits the broker, it's not so much in terms of the loss of the trader, because a legitimate broker who does whatever it is, an A book or a B book, does it in a legitimate way, not so much for the benefit of the client's loss, whether it's a B book, A book, but if somebody's able to trade 1 to 500, they're able to trade bigger volumes, obviously. And that's why it benefits the broker, because the higher the volume, the bigger the contract size, they're able to trade, and then the rest falls in place. So bigger commission, bigger charges, whatever it is, markup on their trading.
If I can make one comment on that, we need to say also that, and it's a personal opinion as well, I think that the regulator took some extra steps that possibly it was not necessary to take. And what I'm trying to say is that there is people that would like to take risks. So there is people going to the casino, for example, which is much worse than investing in a trading. So my feeling throughout the years was that the regulator was trying to overprotect the consumers. And indeed, I mean, if the broker is coming and is providing seminars, for example, to their clients, webinars and all this support, and the client can understand that, okay, there is a risk here, there is a risk on the European entity. I know that these guys have also an offshore entity, and there is more risk on the offshore entity, but I want to go on the offshore entity. I think this should be enough and okay and accepted, because we cannot stop people from taking risks. There is people who like.
That is such a strong point that you brought up there, and I agree with you 100%. As long as the person understands the risk, the only thing that you will get right as a regulator, if you make it too stringent, is that you'll push them to an entity that's not even regulated and is actually out to steal from the customer, because there have been bad participants, so we do want the regulation. We want it. It's important. It stops the bad players. It takes away these participants who have created a bad name. But at the same time, if you go too much on one extreme, then you push that client away and just create a marketplace for the illegal player, right? So
yes, exactly. And you give me now the opportunity to mention also the technology. I mean, to touch the technology side as well, because as a regulator, if you restrict the brokers from following some unaccepted practices, at the same degree you should restrict the rest of the participants in the financial industry, technology providers, for example, to give tools to the unregulated brokers to work. So for many years, what I'm trying to say is that for many years, we've been, even in Cyprus, there were so many unregulated brokers and offshore as well. So for all these years, we've been trying to compete with other companies that had zero regulation and zero restrictions, while on our side, we've been always fully transparent, fully regulated, and happy for that as well, because it was a good service that we've been providing to the client. However, there is competition. You always want to become bigger. If you need to face unregulated brokers, then obviously you are losing a big chunk of the pie, right? So the last few years, it is just the last few years that we have seen the regulator exercising pressure on the technology providers to restrict a bit their offering to unregulated brokers. So it took 10 years, in fact, to see that happening. And for us, it's a big relief now, because we feel like finally there is some fair competition.
we can say for sure Metaquotes has felt that.
Yes.
Has felt that pressure. Being the benchmark trading platform in the industry.
Yes. Which became very strict now, and that's very good. I mean, we need to recognize that Metaquotes is following some very good compliance measures these days, and became the life of all brokers difficult because of that. But at the end of the day, this is the right way.
Yeah, because back to your point where you said, where you mentioned, people have told you, what are you getting into such a risky industry for? It's not going to be around in 2 or 3 years. Well, it is still around, and when for big players like Metaquotes, the ones who are leading the industry, are adjusting. These adjustments are what's going to make this industry last forever, right? As long as you work in a compliant way, you're not out to, it's good. It's all good. And the brokers and the participants who adhere and comply to these rules are obviously doing it for the right reasons. For the ones who are going to try and look for ways to bypass these rules and work in an unregulated manner, they're therefore they've got a different agenda. So
yes, and obviously that's why they're choosing different jurisdictions, that they don't come to EU countries, and especially Cyprus.
This opens up another topic which you did mention briefly before, and let's talk a little bit about crypto.
Yeah.
Let's talk about crypto. Let's talk about how this industry evolves. It evolves a lot. It's we're seeing this these upcoming crypto exchanges. It's it poses as a competition. Let's call it somewhat of a threat. We discussed this before we started. Let's tie into that a bit. Let's discuss a bit about crypto. Let's get into some details about forecast, what's coming up, how the current, let's call it, unfair playground, so to speak, of brokerage firms that offer these services will change, and let's give a bit of insight to that end trader who may not have access to this kind of information.
Yeah. So last year there was a directive issued by CySEC, which was related to the CASPA licensing. So basically the crypto asset providers licensing. There was a big trend over the last few years around cryptos, and the crypto industry in general was getting a lot of traction, and there was a very high vibe. Immediately, a lot of crypto exchanges were created, unregulated, and unregulated most of them, almost all of them actually, because there was no regulation in any country. Then it became like a competition between the countries, which one will create first, will issue first their drafting regulation, and be able to attract as many as possible. In Cyprus, because we have, I believe, a lot of expertise already in this financial services industry, there was a very good movement with the government. They have created some committees, basically similar to the UK committees, which were discussing the crypto world and crypto matters, and they have drafted last year this directive, which basically is a registration of crypto asset providers in a registry in CySEC, and those entities who are getting the license, they can be a crypto exchange. Now, this is because it's a bit of a very thin legal matter, but because this is a registration, the European Union is following now with a regulation, which will be imposed to the EU member states. So they will, they have issued already the MiCA regulation, is called MiCA, similar to MiFID for the financial instruments. And the MiCA is related to the crypto assets, basically. And they try the same way that they regulated financial instruments to regulate now the crypto assets. Cyprus is already a step ahead, I would say, because already we have a lot of big crypto exchanges moving to Cyprus. Some of them, for example, is Revolut and Binance and Nexo and other big names. And already they got registered, a lot of them. So it seems that once we enter the MiCA stage, we will have most of the big players already established in Cyprus, which is very good from different angles. First of all, again, we are ahead of the rest of the European countries on the crypto exchanges. It means more jobs, a lot of expertise in a very fresh industry, which all of us who are in this industry of the financial instruments, I think most of us believe that there is a bright future in the crypto world. So in general, I think that we did very good steps as a country, and already we are in a very strong position, and we have attracted big players, and we are moving to the correct direction. The only issue is related to the banking sector, because we have now two authorities, CySEC, who is giving the registrations of crypto exchanges, and Central Bank of Cyprus, who does not allow the opening of bank accounts of crypto exchanges, even if they are registered under CySEC. So there is a big discrepancy there. We know that there are a lot of talks taking place between the two authorities, and we hope anytime soon that the central bank will give the license to the banks to onboard, the approval to onboard crypto exchanges. Of course, it's not only a matter of central bank, it's a matter of the European Banking Authority. But we hope with all this improvement of regulation at some point to allow it.
Yeah, I mean, the banks need to embrace it in some way or form. This cryptos, yes, there's a lot of speculation. There's, these people who are involved in crypto trading are looking for a quick earn, a quick short in and out, whatever it is. But as a technology and as a concept, it's not going to go anywhere. It's big enough to move markets, and the quicker the banks embrace it, is the better for everyone. Because once the banks embrace it, then that just speeds up the process of cooperation, effective cooperation between the two entities, the two regulations, right? CySEC and the central bank. So with MiCA, that compares to MiFID, right? And then for those who don't understand, or at least maybe actually correct me if I'm wrong, because MiFID is, when it comes to reporting, for the normal brokerage firms that have CFD products, are obliged to report the trades. You did mention this, and full transparency. So the full leg, what happens to the trade from the time the client placed that order all the way through the broker to where it was sent to wherever it was, the exchange or liquidity provider or whatever it is, wherever it terminated, let's call it, where the execution venue was, and back. And the transparency report, I think you need to include in that report what the best price was in the market at that given moment in time, and that the client actually got the correct price. So given that that's correct, MiCA is the equivalent on the crypto side of things. Mm-hmm. And so here's a really important differentiation I think we need to maybe clarify here. The CASP allows an entity to trade in crypto assets, but also have the actual wallet, the actual currency, yes, the actual asset.
Right.
Versus a brokerage firm today without a CASP can offer crypto as a CFD, and a CFD is it's a contract for future difference. It's a derived instrument. It's a financial instrument, but a derived product from where the price has come. Let's say, for example, it's Bitcoin versus US dollar. It's got the dollar price of one Bitcoin. And then from there, it's gotten that price from somewhere. But when you actually trade for the difference, you don't actually have a wallet, which is quite different, I guess, to what a CASP is. And I think let's discuss a little bit about that and why, the MiFID equivalent of a CASP is just makes a licensed exchange, crypto exchange, so much more reputable, and viable as an entity.
Basically, there's I think that this is a major point, and the reason is because indeed, as you mentioned, the crypto providers, they're allowed also to hold in their wallets the client's assets. The difference with the financial firms is that the money, the client funds, are sitting with banks. They're not sitting in their companies and corporate bank accounts. So they don't hold them. I mean, they do custody of the funds. So there is a huge difference here because there is a big risk with, let's say, with an investment firm. You'll deposit the money in a reputable bank, and there are guidelines even for which banks you should choose. You should do a very good due diligence of the banks and then decide, and all these things which are imposed to investment firms. While at the same time, for the crypto providers, they're allowed to hold the coins, which again, they are assets as well. So they're allowed to hold them without having any other restriction. These things are going to be regulated by MiCA. So it was the first step now to issue this registration, the CASP registration, which basically it's more focused on the anti-money laundering side of crypto exchanges. But the second leg now, this whole regulation of MiCA, will cover what you are saying, the safekeeping of client assets, the reporting side, all the corporate governance that the company should have, the best execution, the appropriateness of the clients, and all these small matters that are covered already by MiFID, they're going to be covered by MiCA as well.
Let's go back to JFD. What is your role there? Let's talk about what you actually do in JFD. We mentioned 2012. You started out as a junior spring chicken. What are you doing now? I mean, what's your role there? Let's go into detail there about Joseph and JFD.
No, I'm a normal chicken now.
Normal chicken. Now you're a hen, a big rooster.
Yes. Basically, okay. Look, I mean, I started as head of legal compliance back then, so it was another management. And in 2016, I returned to the company as non-executive director. And in 2017, I became an executive director of the company. Today, I am the main director who is running the business. I have to say that I'm not anymore so involved on the legal and compliance side. Obviously, I'm more involved with the business itself. So I'm trying to run a lot of different departments. So a totally new experience for me as well. Involved in marketing, in sales, in back office finance, legal, everything. So it's a very nice experience. It's a difficult experience, of course, but this is the only way to understand the actual meaning of a brokerage. And I think throughout the years, JFD is doing well. We managed to create a good reputation worldwide, but mainly in Europe. There is a clean record of 11, 12 years almost. So no regulatory fines, no litigation issues, even no clients' complaints, which is very rare for this industry. So we managed to create a very nice organization based on strong and solid principles. Transparency was the number one principle from the beginning, from the founders of the company, and I believe it's something that we kept until today. We've been the role model for quite a few cases in the past. CySEC was, I believe, quite excited with JFD. We tried to maintain the same relation with CySEC and in general with the authorities. We ask almost every year to have a meeting with the regulator. We go there, we update them on our product, on our clientele, on things we have in mind, things that are bothering us as well. And we try to keep JFD fit and proper. And now the clientele is mainly European clientele. It was from the beginning European clientele, Central Europe, Germany, Austria, Switzerland, and Spain. And for the last 12 years, this is the image of the company.
Things, share with the audience, what does JFD stand for?
Just fair and direct.
So living up to the name.
Yes.
I enjoyed our time there when we were colleagues. It was cool.
It was nice. It was basically during the period where JFD was expanding. I mean, it was creating a brand, a good brand, because the first 2 years it was the setup period, basically, and then it was the expansion period, and you joined exactly on the start of the expansion.
I remember those days. For the first, it was for a good running period where we had this this group chat where the whole company was on. So a few things that were for me as let's call them KPIs, you know, from my seat, not as a head of technology, but you know, from what I could see. First of all, that group was expanding. Like when I joined, there were like 38 people or something like that, and then by the time I left 2 years later, it was at 90 or whatever it was. And I recall this. This was also quite good from the management side, where they were. One thing that was really great is that they were sharing their successes, the records that were getting broken. That was almost on a daily basis. That was incredible, like clients and volumes and very frequent. I remember this. Another record broken. It was quite an incredible period.
Yeah, basically there was I mean, after this period that you are sharing, there was a period in 2018 that we have acquired a German investment bank as well, and JFD Bank, and this was a very big step for the company. And later on, and even today, I mean, the main focus is to keep and steadily grow what we have in Europe, because there is a good brand, and we try to maintain it as it was forever. But at the same time, we try to open up a bit on other jurisdictions. Right now, we are focusing on Latin America. We have a big team over there of 35 people, and we try to establish a good business over there. It's a new market for us, totally different. It's on different license as well. So it's a complete new world, but it's very interesting. And that's the way we want to go forward. We want to enter slowly in different jurisdictions, set up offices, have employees, local employees, and develop them. So we don't want to have this remote onboarding of clients here and there. We want to have locals who will help us structure good companies. We are partnering always with very reputable audit firms and law firms wherever we go. So we create a very good environment, and then we set up the entity, and we start the employing of people, and then the onboarding of clients.
I remember the clientele back then. It was Central Germany, West Central Germany, German Austria, and they were not high net worth individuals, but people who were not, had wealth, and also long-lasting clients. I would imagine maybe in LATAM is not the same, because LATAM as an industry came after I left. So for you, I would imagine that is quite interesting. The advances, I guess, this kind of journey that you're experiencing between these different clientele, right? So a longer lasting, let's say, more wealthy individual where they might invest with the firm $5,000-$10,000 or more, and versus LATAM, where I don't think even $100 is a lot of money for someone.
Yes.
And without, maybe I'm even tramping a little bit on what you would say about your company is, it makes no difference how much money somebody invests. You treat them the same, I think. Look after them. So what are the challenges?
Yeah, but between the two, first of all, between the two entities, because you have one European, the Cypriot one, and one offshore entity, we said from the beginning that we'll follow the same rules of the European entity on the non-EU entity as well. This is very rare. I don't know, to be honest, personally, any broker who is following the same logic.
Yeah.
It puts you in a difficult position because you cannot easily compete the offshore brokers, which are more relaxed on the regulation. However, we decided that we'll follow this route because we didn't want to create any issues on the branding of the company, and I think so far it was a good decision. There is indeed a very big difference between the Europeans and the non-Europeans, and especially if the Europeans are coming from the Central Europe. I mean, Germany, Austria, Switzerland, as I mentioned before, and Spain. The average deposit is much higher, but at the same time, the cost to acquire the client is much higher as well. The life expectancy of the client is much longer than the offshore client, but at the same time, the European client will read all the paragraphs of the client agreement. So there are advantages and disadvantages. I think we have mastered well the European clientele. We know, we understand the needs of those clients, and I think we are transparent enough and strong enough to answer to any questions they might have. But at the same time, on the offshore entity and with the non-EU clients, it's cheaper to acquire them, but the deposits are much smaller. The clients are coming and leaving quickly. There are not long-lasting relations over there. But indeed, I mean, if you have a very strong marketing and you constantly onboard clients and you have a good retention team as well, you can have a very healthy operation. In both cases, we don't sacrifice the product and the principles of the company. So we just try to balance both cases and make as much money as possible from the both cases without creating any regulatory issues or without working against the end clients.
I think it's important, for that smaller trader who doesn't have, tons of money to invest and trade in the markets, but at least, if their experience with their limited budget is something at least close to what it is like to actually trade, then I guess better than going to university, right? You go actually trade the market, see what it is actually like, and not being scammed. So that's important. And
the most important is not to give misleading information to the clients. In both cases, even if they have money or if they don't have a lot of money, I think you should not try to convince the client that he can make money in a very difficult industry and complex industry and very complex product as well. So the risk disclosures, I think, are essential for our business. I believe that there are very good regulations around the risk disclosures in general, and I think the clients are well protected, but we should be careful as companies. What do we say to the clients? We should be open with the clients and tell them that, okay, it's a very high risk product. You might lose all of your money, so just invest as much money as you can lose. And this is a very, very basic principle.
Never put any money that you need. Put something that you can write it off in your mind.
Yes.
And trade as carefully as possible. So which jurisdiction is LATAM falling under that they're able to onboard on?
Vanuatu, Republic of Vanuatu. Which Vanuatu, basically, if I can say a couple of words of Vanuatu, because I think that it's not very fair, the reputation around Vanuatu. It was a soft regulation at the beginning, a few years ago, 6-7 years ago. But lately, the last 2 to 3 years, they have changed totally their licensing procedures. They have changed also their reporting and in general their regulation. They became quite strict, I have to say. There is a lot of regulation in place now, quarterly reports, annual reports, etc. Reports around AML. There is a requirement now for local office, local employee, local director. So it became much closer to other jurisdictions like Seychelles and Mauritius. I would say actually that they have nothing to jealous now from Seychelles and Mauritius, that are two of the most famous offshore jurisdictions right now.
Okay. So which jurisdiction would you say is soft?
Jurisdictions that do have a license, for example, and they are soft. For example, in
I know SVG, some big issues there, right? And now they've stopped them.
Yes, SVG is an example of unregulated brokers, basically, that they've been presenting themselves as regulated, but in fact there was no actual regulation. It was just an incorporation of a company in St. Vincent, and then they've been presenting that they are okay to offer services from there. But now they are changing as well their law, and you need to provide legal opinions from each country that you are allowed to operate. So most of the SVG brokers, they have lost now the authority to provide investment services.
How does the one of the challenges, or I guess an inconvenience, right, for an end trader when you want to open up a real account, you need to go through a series of all these questions and then tell us who you are. Do you understand trading? Whatever. It's a good thing. We understand why. It's frustrating for that end trader, right? But it's there for their own protection. How do you know, what are your challenges then? How could maybe technology help you? What would you like to see out of technology, right? And I can speak from a technology standpoint, how things have become kind of easier for the broker, with artificial intelligence. Take a selfie, KYC is done instantly with the verification of the image that you take to verify you as your ID, the text on the ID. All incredible technology, but I guess it's still a bit tedious, or there's a bit of a process.
Yeah.
What are your challenges and what are your customers saying, and how do you adjust to it?
The European clients are quite comfortable, to be honest. I mean,
they go through it,
yeah.
They don't care. Okay.
They feel comfortable because they understand that there is a good broker that is following the procedures. Okay, each country has their own procedures. Fair enough, we'll follow them and we'll open an account. For example, if you try to open an account in Interactive Brokers, it will take you a few hours and then a few days until they verify you. But you are always happy because it's Interactive Brokers and you know that it's a very solid broker and your clients, your funds are safe with them. However, there is always some, even if they don't complain, we know that it's something that is bothering them. The biggest issue is the onboarding of the client, which is taking some time, and it's taking time because the AML law of Cyprus is a bit outdated, and we hope, and we have heard many times also from the authorities, that they are willing to change it. For a small example, just for the audience who are not involved in this business, nowadays it's difficult to ask a client to send you only an ID or a passport. Maybe they have a driving license. There are also poor people, they don't have money to issue a passport, but they have a driving license because they need to have a car. So it's unacceptable not to to be able to get them to onboard them with a driving license. And at the same time, I would agree with you that the artificial intelligence is a tool that we will need to incorporate, but to do it from our side as brokers, we need to have the approval of the regulator. Exactly. So there are countries which can accept the client even only with the passport number, without even uploading the passport, because there is a central system, and they can verify the ID of the client, the status of the client, the address of the client, if there is any risk with the client, and all these things. In our case, unfortunately, we are still asking for copies of passport and ID. I hope that at some point it will be changed. We see a lot of improvement now, even with this artificial intelligence stuff. We hope that soon we'll be able also to use them in our...
When it comes to anti-money laundering, so AML, there obviously it's, to make sure that the client's money isn't from an illegal source. And I guess, I don't know if this applies. Do you apply more strict, let's call it AML checks on larger deposits? I would imagine that you do. You're not going to go and do the same strict check on somebody who's depositing $50, I would imagine. But around technology, how can the regulator, maybe, with use of this platform, maybe we can tie into that, because AML is, source of funds. How can you know that the trader who's provided the information is even correct? I guess there's so many different topics to discuss on that.
Indeed. First of all, there are some, we have created also in-house a few software that they can identify specific movements of the client in relation to deposits, withdrawals, etc., that they can indicate, for example, market abuse or money laundering and all this, or abusive trading, etc. So we have tried to put on paper a logic that could lead to a possible money laundering offense, and we have converted the logic into software. There are a lot of companies that have done the same. It's not that we have done something super special, but it is something that we need to have in place these days, because there are so many transactions and so quick transactions in and out that you cannot identify manually if there is a money laundering offense taking place. Now, with this is not enough. This is a problem that we would like at some point to use artificial intelligence in order to understand, to take more parameters in the equation. Because right now we have created a software, let's say, which is taking 10 different parameters and is giving a result. There are so many parameters that we could take from a client and the client activity that if we could use the artificial intelligence itself, we could just calculate everything and get to a better result. It's taking time, obviously, to have it in place, and most of the banks, they're working already towards that direction. We hope that we'll be able to do as well. For sure, right now we are complying with what we have to do. Is already we have already in place more things that we should, but it's what we are saying. It's difficult to identify because of this layering from one account to another account, crypto, etc., and all these things is very difficult. So it's not enough with the creation of one software to identify these transactions, and that leads to another issue, big issue basically of the regulator, the over-reporting, because the law says if you have a suspicion that there is money laundering, you should report it. So in most of the cases now, the investment firms, even if they have 0.1% suspicion, they report immediately because they say it's better to report because you don't pay tax or something if you report. It's better to report than not to report and then be in troubles. So around the world now, the regulators are having a problem of over-reporting.
That makes so much sense to me. Like, that would create such a massive overhead. If you're a broker, to cover yourself, just report everyone.
Yes.
Done. I've done my part, but that kind of defeats the purpose. And I think artificial intelligence definitely, to be honest, I don't know of a solution that exists with this, but, just in kind of a general description is, looking at the activity, irregular activity of someone's trading, right, or someone's the movement of the money, where if you look at AI, what does AI do? AI takes a very specific, at the moment, the way it is, so it's not general artificial intelligence. It's taking a specific skill that a human does and training a machine to do it. So like ChatGPT, for example, has got an incredible ability around speaking, talking, natural language, right? So it's able to, the way you're able to communicate with a technology like ChatGPT is because it's just got this massive corpus of text that is able to predict what next to say, which is quite a fascinating technology. But I think around AI and for here money laundering is, how does a normal trading account look in terms of activity? And if the data you're picking up as an AI is irregular, something's wrong here, that would help. I think that would help quite a lot and reduce the overhead, as opposed to putting this kind of blanket rule, brokers scrambling to cover their ass and just report everyone and say, we're good, but you're not actually good because you haven't tackled the problem from its root.
You're right. Look, there is discretion on the companies to decide what tools they will use for identifying money laundering. I would say something different. Why we don't move this responsibility of creating a software to the government? So to put all the resources in a central software, which will not give even space to the brokerages to escape from this monitoring of money laundering. So we could get also something from the authorities officially, a tool that they will develop, which will obviously be around artificial intelligence, and we could implement it in our systems. This way you will avoid this over-reporting. Because if we build our own tool, obviously we will build it in a way that will promote the reporting. Because if you report a client, you don't need to stop the client to freeze the account. You should keep the account open and live. Otherwise, you are tipping off the client, which is another criminal offense. So for us, the ideal scenario, if we were building the system, we report everything, all the clients, most of the clients at least, and at the same time we have the clients trading, and that's it. But what about the other side of the coin? I mean, the authorities will get flooded from reports.
You're opening up opportunities for companies like mine.
With pleasure.
Let the government come. Yeah, we discussed these the regulation. We discussed how artificial intelligence can change the industry, the challenges that you face as a CEO. You in your position as a CEO, what is JFD's kind of looking forward? Where are you looking to expand? What jurisdictions are you looking to get into, and expand further than just LATAM? Mm-hmm. Let's talk a bit more about JFD.
Yes. For sure, as I mentioned before, we want to keep whatever we have developed in Europe and continue what we have started 12 years ago. I think we have created a good brand. Right now, we are in the process of getting out again, participating in different events, doing seminars to people, a lot of webinars, a lot of meetings, networking, etc. We want to establish again the strong relation we used to have with clients, with high net worth clients as well. So we try to refresh a bit the network and looking around for new products as well.
I remember China was a jurisdiction which I think is not allowed now. Back when I was there.
Yes, China is complicated. China is complicated because of the money, of the capital restrictions. So we stopped China completely, actually, and whatever we are going to do on the European entity, it will be related to European countries. So we'll keep focusing on those countries that we've been before: Germany, Austria, Switzerland, and Spain. The rest of Europe, obviously, we are onboarding clients as well, but I would say these 4 countries are the main interest. We have offices in Spain as well. We have in Germany, we have in Bulgaria, and we have in Cyprus. So from these 4 offices, we will try to enter into as many countries as possible, with creating also partnerships in any other country where we can see an opportunity. On the offshore side now, beside the Latin America, which is not, it's a very big territory, it's not easy to say that we finished with that and we'll go to a second one. But considering that we have there an established team and a lot of clients already, there are discussions to move to a couple of other jurisdictions. The one is the UAE and the Gulf region. And the other one is again some countries in Asia which are not, we're allowed to onboard clients, and there are no restrictions on capital. But it's not such an easy decision. We, as mentioned, we are the brokerage that we want to see first that we are okay with what we are doing and in the countries that we are operating, and then to do a whole research in the new territory, discuss with local law firms, local accounting firms, audit firms, meet the regulator, and then go and establish another entity. So the plans are to keep focusing on Europe, expand Latin America as much as possible, and then if we have time to enter into new jurisdictions, with great pleasure.
Time. There's not enough time.
Yeah. Yes.
We're going to be putting links in the description. Where can we find JFD Brokers? Where can we find Joseph? I know where to find Joseph. And let's do some closing comments. I think we're an hour in already, which is time flies, right? When we talk the talk.
Yes.
So we can let's do some closing comments here. And also, thank you for your time, Joseph.
With pleasure.
Let's do some closing comments here. Where can we find JFD? What is the website? Where can we find Joseph? What are the important things?
Yes. First of all, JFD. It's www.jfdbrokers.com. On a personal level, around the legal stuff, www.tsirakkis.com. And I would like to close this not with negative feelings to the audience. I think that we need to make it clear that indeed it is a highly regulated industry with a lot of challenges and difficulties. But at the same time, there is room for other brokers as well, as far as they are correct and regulated. We don't want to make people feel like the brokerages are criminals or whatever. There are very decent brokerages. They are doing a very good job. That's why I think the whole industry lasted for all these years. From JFD standpoint, we are happy to welcome constantly more clients. I think we are doing a very good and clean job. As mentioned, no complaints against JFD. We are a very clear and transparent broker. I think that if the regulator stands next to us as well, to the brokerages which are doing a good job, I think the industry will remain and will become even bigger, because eventually we are going to welcome also the crypto exchanges in the bigger family. So ideally, let's keep the good work in-house, the good relation with the clients, and the good relation with the regulator as well. And I just believe that everything will be okay.
Thank you for your time, Joseph. Always a pleasure.
Thank you very much as well for having me. Good luck.
Thanks.
Thank you very much.
It's a wrap.